Hi there, welcome back to the channel. My name is Robert Wolf. I'm an asset coach and a tax strategist. If you haven't subscribed yet to our channel, go ahead and hit the subscribe button, hit the little gray bell to get notified of all of our upcoming content. If you like what you hear, give us a little thumbs up, add some comments if you want some content and you have some questions about what or have some ideas of additional content. Remember, our content is about what we call economic termites. These are the 5 economic issues that are going to eat away and destroy our wealth, just like termites do. And before you know it, you have a termite problem. The damage has been done. Economically, we have 5: taxes, inflation, time, laws and regulations, and debt. Debt is not in the book here, but the other 4 are. And the worst of these 5 is laws and regulations. Our politicians, our lawmakers, they make laws that destroy all of our wealth. And so what we want to do is make sure we're aware of it. And so if we're aware of it, we know how to plan for it. And guess what? We can exterminate it and combat it. And so, or at least just maintain it and be able to continue to use our businesses, because this is focused on you, the small business owner. So what I'm going to do is I'm going to go ahead and minimize my screen here. And we're going to talk about this video, today's content, this article. Ray Dalio says your cash savings are not safe and will be taxed by inflation. Build a hedge with 3 alternative places to stash your money. Now, first of all, I want to let you know that I'm not saying I agree or disagree with any information. This is just for educational purposes only and content. And not knowing your particular situations, it is not suitable for me to say that this makes sense for you. But the key here I want to focus on is that your cash savings are not safe and will be taxed by inflation. So inflation is going to cause our wealth, your savings, to decrease if your savings, cash, is not. So one of the first things that it comes up to say is that some say that cash is king. And if you've seen any of our videos, you talked about anything from, watched anything that we've done or have been following us for a while, you know that we don't talk about cash as king. The flow of cash is king. As a business owner, everything is about the cash flow. And that is king. Just the same thing as knowledge is power? No, the implementation of knowledge is power. Okay, so we want to make sure we understand that. Now, according to Ray Dalio, founder of the world's largest hedge fund, Bridgewater Associates, so he may have a little idea of what this means, right? It may not be wise to keep too much of your investment money in cash these days. Now, we use cash, right? People use cash to protect from what? Risk, of course. But cash is not a safe investment, is not safe place because it will be taxed by inflation. With the cause of inflation, part of investing and understanding wealth building is understanding the political decisions that are being made. And part of that is the cause of inflation increasing. So if your cash is sitting there earning 0.5%, 0.8% at the bank or whatever, and inflation's 4%, guess what? You've got a negative arbitrage. You're losing money. Dalio's concern came after U.S. inflation hit a 31-year high in October. Well, his concern should have been before that, but that's okay. And prices continue to climb. In November, the consumer price index rose 6.8% in a year-over-year basis, marking its fastest increase since 1982. Remember what happened in the late 70s, early 80s? That's right, double-digit inflation. Simply put, consumers are taking a big hit in their purchasing power. So let's take a look at 3 ways to hedge against inflation. Now, here's the thing, is that when you look at when this started occurring about a year ago, the government, the Fed chairman was saying this is transitory. That, oh, this is just temporary because of the pandemic. No, this is because when you flood the market, when you flood the economy with trillions of dollars, you slow production because you shut down the economy, you're going to have inflation. That's not, you can take that you take that in high school, supply and demand. You take those basic economic data information in high school. So you don't need to be the chairman of the Federal Reserve to understand what that means. Okay, so please do not lie to us politicians. Please do not just say stuff to make us feel good. Please tell us the truth, and you have not been. So gold is often considered a go-to safe haven. It can't be printed out of thin air like fiat money can, meaning the dollar, and its value is largely unaffected by economic events around the world. Okay, we can agree to disagree. The yellow metal has helped investors preserve wealth for centuries. Some believe this could be another one of the shining moments. You can buy gold coins and bars at your local bullion shop. You can also look at a large gold mining companies. If gold prices go up, these miners will earn higher revenue and profits, which tend to translate into higher share prices. For instance, companies like Barrick Gold, Newmont, and Freeport McMoRan typically do well through times. Now, if you look up these companies, which I recommend, look up these companies, take a look at where they're mining. The majority of these companies aren't just mining in gold anymore. They diversify in other precious metals as well, which could help hedge your gold investment as well. So again, this is an investment advice. Go research those on your own and take a look at that on your own. There's no need to start big these days. Can you build your own diversified portfolio just by using a leftover digital nickel or dimes? Okay, Bitcoin. All right, this is a big topic. We're not going to talk about what Bitcoin is. Is it a good thing? Is it a bad thing? We're not going to talk about that. If you're curious or interested in cryptocurrency, which is what Bitcoin is, you need to do extensive research on what that is and what it means to you. Now, one considered a niche asset, Bitcoin has entered the mainstream. Now, one reason people are increasing adopting cryptocurrency is because they believe in its potential of inflation hedge. Okay. Now, is that true? Is that not true? Well, central banks can print money all they want, but the number of Bitcoins is capped at 21 million by mathematical algorithms. So like gold, you can't print gold. You cannot print Bitcoin and other types of cryptocurrencies similar to Bitcoin. Okay, there's only a certain amount made, and therefore supply and demand creates that value. Now, Dalio recently said that Bitcoin is almost a younger generation's alternative to gold, which is probably an accurate statement. The price of Bitcoin has pulled back substantially in recent weeks, but it's still up 60% year to date. Okay, now, of course, at this time of this article, at me recording this has probably changed, right? But at the bottom line, it's interesting to say or see that now, there's radical ups and swings, okay? So that's why I said earlier, you need to make sure you do your research. If you want to buy Bitcoin directly, be aware many exchanges charge up to 4% in commission fees just to buy and sell crypto. A few investing apps charge 0%. Investors can also gain exposure through companies that have tied themselves to the cryptocurrency. For instance, software technology, MicroStrategy, which is big. Michael Saylor has been very big in adding Bitcoin to their portfolio. Electronic vehicles, a giant Tesla holds around 43,000. Okay. Now, then there are pick and shovel plays like Coinbase Global, which runs the largest cryptocurrency exchange in the U.S. So there's more and more investments coming out that are going to use Bitcoin and other cryptocurrencies as part of their portfolio, just like mutual funds and ETFs where they have stocks and bonds underlining the investment strategy. Same thing is going to happen in cryptocurrency. Okay. Now, it's true that these companies are all quite pricey, trading between $238 and $8.99 per share at the time of this article, and at the time of this recording, it's going to be different. But you could get a smaller piece of Tesla or Coinbase by using an app that allows you to buy fractions shares, very similar to mutual funds, where you buy fractions shares of stocks. So. All right, so let's take a look at this fine arts. So this tends to not be the most people's go-to. Stocks are volatile, cryptos may make swings on either side. Even gold is not immune to the market's ups and downs. That's why if you're looking at ultimate hedge, it could be worthwhile to check out Real, the overlooked asset, fine art. Now, fine art this is an interesting area because there's a certain type of segment of the population that focuses on this as part of the investment. And again, there's no set science of what this art is. But you can look at historical fine art prices and see that it does and tends to increase as that contemporary artwork has outperformed the S&P 500 by expanding 174% over the past 25 years, according to Citi Global Art Market Chart. Now, and it's becoming a popular way to diversify because it's a real physical asset with little correlation to the stock market. But the problem with art is that if you own it, the only way you get your money back or get a return is that you got to sell it. Therefore, there is cap gains, just like any other type of investment. But the most concerning thing is that will somebody want that and pay more than what you did? Okay, and that's the risk of fine arts, which is why When you look at the fine art market as a totality, the majority of fine art out there that holds its value and increases are those that are probably more expensive than the average person can afford. Okay. But doesn't mean that it's not a good potential. Again, this is not investment advice, but it is, to Ray Dalio's point, a particular asset class that could hedge inflation. On a scale of -1 to over 1, with 0 representing no link at all, Citi found that correlation between contemporary art and the S&P 5 was just 0.12% during the last 25 years. I don't know what that means. Okay, I'm going to be honest with you. What the heck's that mean? Earlier this year, Bank of America investment chief Michael Harnett singled out artwork as a sharp way to outperform over the next decade, due largely to the asset's track record as a inflation hedge. Now, anytime you have Citibank, Bank of America, any type of large investment company, they have skin in the game, one way or the other. So a lot of times you got to take their information that they share with us, kind of not as a grain of salt, but just understand what's their motivation. Are they just really truly just saying stuff? Are they unbiased, just truly just saying stuff? Or is there a potential motivation behind there? Right? So investing in art by the likes of Banksy and Andy Warhol used to be an option only for the ultra rich, like Dalio. But with new investing platforms, you can invest in iconic artworks just like Bezos and Gates do. So what those are, I have no idea. Again, this is not my area of expertise. Go ahead and research it if you're interested in that. But at least I find it interesting. And the main point that I wanted to bring out is what Yahoo Finance is letting us know, that, hey, your cash is going to be taxed by inflation, meaning your tax is going to be lowered. Okay. We use the word tax, meaning as a negative connotation, right? It's always seemed to be a negative connotation when you use that word tax. But I just wanted to make sure you understand too much cash is it's going to affect you. Now, what are some other areas that you have liquidity, which is what some of these options did not provide? Where do you have liquidity? Where do you have the option to hedge inflation, where you have the use of dollars, that kind of stuff? If you're interested in different other areas besides this, as a small business owner, focusing on conservative growth, what makes sense for you, reach out to us. Put that in the comment. Let us take a look at it and see if we can help you in any way with that. But at the end of the day, if you like this article, give us a thumbs up. If you haven't subscribed yet, hit the subscribe, hit the little gray bell so you can get updated on other articles and videos and contents that we add here. This whole channel is about you. So if there's in the comment section you want to look at or hear about information specifically to you, add that information. If it makes sense to the overall content and what we're trying to do with this channel, we'll do a video on it. We'll add more content to that particular area. So again, this is for you. So you engage, we engage, we engage, you engage. And it's together as business owners, our goal is to, what's to say, rising tide raises all boats. That's what we're trying to do. Provide information, read between the lines, and let you know what the rhetoric out there is being said and how does this affect you, good or bad, so you can make a good business decision for your life and your business and your personal life. Thanks so much. My name is Robert Wolf, and I look forward to having conversation with you here shortly. Thanks. Bye-bye.